Well, we're here again. And real estate, honestly, is stressful enough. We really are dealing with so much between our flips, our rentals, the tenants, wholesale, whatever it is that we have going on. It's already stressful. So now having to throw in taxes, well, that's just pure fun, isn't it? The last thing we really want to do is have to fumble around for receipts and try to turn all of this stuff in so that we can file on time and avoid any other penalties that the IRS is going to tack on. Well, here's the deal. Many real estate entrepreneurs are missing out on huge savings because they simply don't have their finances prepared or in order on time. By actually tracking our finances throughout the entire year, we can find opportunities to implement tax strategy. We can find opportunities to understand exactly what our tax obligation is. Is there additional write-offs we can do? We'll find opportunities for even expansion and growth if we wanted to. And it really boils down to this. With no tax strategy, guess what? We're overpaying Uncle Sam. With late filings, well, now we have all of these additional penalties and fees that are simply just going to eat away at our profits. And if you don't know who Warren Buffett is, he's one of the wealthiest men in the world. He always says the number one rule to making money is to not lose any money. And penalties and fees and expenses, all of those do that to us. There's no benefit to us at all, only benefit to the IRS. And 3, when we go into the DIY, do it ourselves, panic mode, trying to get everything done on time so we can avoid these penalties, we then start missing out on deductions. There's a lot of tax code that tells us exactly how we should do things. And what a lot of people don't understand is the tax code is written to tell you exactly what the government wants us to do. And by us doing what they want us to do, we get a bunch of different tax benefits. For example, you own rental real estate? Great. You know what the government always needs? Affordable housing. Perfect. So in exchange, we're going to give you some depreciation and a bunch of other tax incentives that, many other people may not get if they don't own rental housing. So what do you need to do to make sure that you're prepared? Well, you need to reach out to your accountant or your CPA, or you can reach out to us at G2 Business Solutions. We got your back either way. So right away, if we're thinking about maximizing deductions, here's some real easy low-hanging fruit for you. 1, we want to know if you do have a home office, are we finding ways to include that in our deductions? And many different forms we can do that. A standard home office reimbursement if your primary operations are virtual and you're doing it from a dedicated space. You could also have an administrative home office if you actually have a physical office location outside of your home. So there's a couple little nuances we want to look there. Also, we want to look at your mileage. Is there mileage that we can deduct? And oftentimes people think that deducting the entire vehicle, hey, I want my company to own the vehicle. That way I can write off, whatever the payments are. We can write off the repairs on the vehicle, the maintenance on the vehicle. Most times people want to pursue that thinking it's going to result in more savings. But oftentimes, depending on how much you drive, the mileage wins out. It typically provides more of a saving for smaller businesses. Now, if your business model includes a lot of trucks, think service companies such as HVAC or construction crews, electricians, things of that nature, then it might be a different story. But getting with your accountant or your CPA or with us, we can help you identify exactly what makes sense for you. All with the idea of you not leaving any money on the table. Obviously, beyond maximizing deductions, we also want to help you avoid any last minute panic. Now, here's the real truth of it all. If we're keeping track of our finances accurately throughout the entire year, tax season is easy. And honestly, you want to know the secret sauce? Outsource your bookkeeping. Outsource your bookkeeping. That's one of the simplest ways that you know it's being done correctly. Your bookkeeper should understand how the books need to be presented to the tax preparer, okay? Because there's a version that's going to be useful for you as a business owner, but how it needs to be prepared and presented is also important. But by having that set up, you're covered. You're good to go. And when tax season hits, it's going to be smooth. It's going to be a breeze. And the third thing we really need to focus on is compliance. The tax law is changing constantly. There's tax laws that have been in process or been in action that simply reduce the amount that you can deduct or that you can write off over a span of 4 or 5 years or more. And there's things that are changing every year. One thing that changes every year specifically is the standard deduction. How much Could somebody who is single or married take off automatically from their taxable income? That's always changing. But as these things change, so do the rules and the regulations behind them in order for you to stay compliant. There's a lot of different tax forms. What most individuals who don't actually operate another company, who don't have rental real estate, will file in is pretty much a 1040. All right, that's your personal tax return. As soon as you start bringing in a business, you have different forms like Schedule Cs or maybe an 1120S, or just depending on what the business model is, how it's formed, and things of that nature. When you have rental real estate, that could be presented on a Schedule E. If it's a partnership, it could be presented on a different filing, and you get a K1. And there's just so many different forms out there that require you to fill out correctly in order to stay compliant. And here's really the key behind compliance. We want to be able to maximize your deductions without triggering any audits with the IRS. That's the main thing. And when it's done right, you won't trigger an audit. But when an audit does come, because if you're in it long enough and you really are getting behind your strategy, it's likely that it could happen. But when the audit does come, we want to make sure everything is in order, so it's a quick and easy discussion. Oftentimes when an audit gets triggered, what happens is it gets assigned to somebody and they simply ask a few questions. Can you show me why this, and that is? And if we can provide proof right there on the spot, most of the time it just dies right there and we're done. With that type of security, you can sleep better at night. There's a lot less stress. And if we're keeping track of everything from the beginning all the way to the end, you're well aware of how much your tax liability or benefit may be at the end of the year. So whether you're a newbie just getting your feet wet or you're a seasoned pro in the real estate game, the biggest thing to understand is that you still can control your tax journey. You still can increase your profits. You still can pay less with less stress with taxes as well. So again, what's the action step, guys? Reach out to your CPA or your accountant. Make sure you're having this conversation with them. If you don't have a CPA or your CPA or accountant, your tax preparer, they're not really doing or providing the value that you're expecting, then reach out to us over at G2.